and then you're looking for a rejection with a stop above that high. First profit before the Asian low, needs to make sure that it's 2R. That is just a fantastic setup, and it happens, as you can see, almost every day. 90% win rate, 24%, 24 grand made in the space of, what, 7th of February? So we're looking at 20 odd days, 18 days. There are two ways to trade in the marketplace. You can trade like a machine gunner, where you're going to take as many positions as possible and hope for a good result, or you can trade like a sniper. I prefer personally to trade like a sniper. Snipers take their time, they mark up their targets, and they trade only when the time is right. In today's lesson, what I'm going to show you is how to trade like a sniper. Using a key liquidity session, I'm going to talk you through a full strategy as to how you can get into trades regularly, almost on a daily basis, and consistently take easy profits out the marketplace. If you use the strategy that I teach you today, you can open up the doors to a really, really profitable trading career. Now, I need a massive favor. I work really hard trying to grow my YouTube channel. It's a really tough game out there, but it helps me massively if you could subscribe. I love teaching you guys. I love hearing how you've used these tips to make profits in the marketplace. All I ask in return is you pop me a like on this video and subscribe to the channel. Cheers. Before we get started, there's a few different sessions that I think are really important for you guys to understand are kind of key sessions to trade. Now, I'm going to just zoom into my charts. I'm going to turn off a couple of my session indicators so I can show you these a little bit clearer. I'm going to show you how you can use these to your advantage. So let's leave that one on, leave that one on, and leave that one off. Okay. So today we're going to be talking about the Asian range. Now, the Asian range is a period in the marketplace where liquidity and volume is quite low. New York and London are effectively closed, and whilst trading happens kind of 24 hours a day over 5 days a week, there are times where there is lower liquidity and lower volume of trading in the marketplace. And you can mark it on using this really handy tool called the Asian Range Nico 948. Now, how we're going to use this for now is we're just going to put it onto our charts. This is the timings that you want to use. So you're going to set it at 5 p.m. or 17:00 hours to 1 a.m. It's on a slightly different time zone to what I am on, but what this gives me is a session open at 10 p.m. which is UK time, and a session close at 6 a.m. UK time. This is when the Asian range closes and then other sessions start. And what happens is, and I'll show you just on a lower time frame, what happens is after Asia closes, which is this line here, you have a session here, which is the Frankfurt session. Now, this is another low liquidity, low volume part of the trading day, and it can often be used as targets, but we'll save that for another video. The next session that I want you to pay close attention to is the London Open. Now, I marked that on from 2 a.m. using the same indicator, so I had another version of the indicator. I marked that on, and just so you know how you do that, you just literally, you can either copy and paste it, so you can right click and then click copy, or what you can do as well is you can just go to your indicators. I've got it saved as a favorite, but if you type in Asian Range Nico, it will come up, and then you can just click and it will add another instance, as you can see here, which I'm obviously going to get rid of now. Okay, so we want 2 instances of this at least. Okay, you can mark on the Frankfurt if you want as well. That's 1 to 2 if you want to do it. It's not necessarily for the strategy I'm going to teach you today. And then what we're going to do is we're going to be looking for manipulations of this Asian range. So what happens typically is when Asia gets manipulated, and this is a really key example here, is when Asia gets manipulated like this, it will often create a reversal. So let me tell you why your Forex strategy does not work. 95% of all Forex traders fail. This is partly due to the fact that you're rubbish at following basic rules. You all know who you are. But also because 95% of all trading strategies are flawed. My name's Czech. I'm the founder of Strong Money Forex. I've tested almost every strategy in the marketplace, and I've built over the last 8 years a smart, simple, easy to learn system that's taken the best bits from everything out there. Now, I want to reassure you, it is not your fault. Strategies you see online are oversimplified, heavily marketed garbage. The good news is I've spent years working out why so many traders fail, been one of those traders, and I've used those strategies with something that's been under your nose all along. You may even be using it right now, and not even realizing how important it is. I'm currently, literally as we speak, building my 2024 mentorship course. As an early bird special, anybody who signs up using that link below will earn themselves lifetime access to my coaching and my mentorship course. A free one-to-one coaching call with me. The best part is at a massively reduced price of just £49. You will never see this course at this price ever again. Just from the offset, you can see the Asian high being swept. We can see a nice clean rejection of it. And then we're going to hold down to our first liquidity target, as long as that liquidity target gives us 2R out of the marketplace. I'm going to show you later in the video exactly how you get into these trades and what setup we'll ultimately be using. But for now, let's just look at the theory itself. So you've got a sweep of that Asian high. You then have a rejection from that Asian high. And then I want at least 2 to 3R out of the market. The opposing trade, of course, is when the Asia low gets swept, and this is a perfect example of what happens. You can again take the rejection, stop below the low, first target here. Now, when I'm talking about first targets, I'm talking about the first obvious liquidity point. So on the sell, it's either here or here, depending on what your appetite is, and on the buy, the first liquidity point I would class as here. Now, look at it this way. If you can consistently take out the marketplace 2 to 3R every single day, so here we've taken 2.7 and here we've taken 4.1, what it does to your profits is absolutely huge. So let's look at this. So we've taken 2R out of the marketplace at 1% per trade, which has given us a total of 2%. On a $1,000 account or £1,000 account, you've just made yourself 20 quid. On a $100,000 account, you've just made yourself £2,000. Now, 2% per day is massive. If you can take out the marketplace 2% every single day, that's a huge, huge markup. Look at it this way: 2% per day. Let's say you did that 3 days a week, 6% per week, £6,000 a week. You know, you take £6,000 and you do that, say, every 10 weeks. You've made 60K in just 2.5 months. And if you're using a prop firm or you're using your own funds, it doesn't really matter. That's a massive increase. When you look at most long-term investment plans, they might give you somewhere between 5 to 10% as a return on an annum on per year. So if you can do 5% per month, you're doing better than most mainstream investment products that you can buy today, especially in the recession that we're currently going into. So we're not looking for huge profits. Now, your appetite might be greater. You might actually want to take the sweep of the low and take that back to the sweep of the high and take yourself 8% out, or 8R in this situation. That's really up to you. For me, I like to trade small but consistent winners, because often what happens is, let's say you did shoot for these lows down here. Okay, you can often find yourself the trade will reverse. Yes, you've shot for 9R, that may work sometimes, but I would rather take regular profits out of the marketplace. So all we're doing with this strategy is we're waiting for the liquidity of this session to be swept and then a rejection. So no sweep there, no rejection, no sweep there, no rejection, which means no trade. Okay, this one here, no sweep here, no rejection, no sweep here, no rejection, until we get to later in the day, which is along here. Then we get our sweep. So what we can do here, very, very similar. And you'll see that this Asian range gets swept all the time. Now, let's say you'd held down to this low, expecting that this push down to continue. Again, you would have lost your trade. And this is the point. So instead, we use our first liquidity area, which is here. That gets us 5R. That was a massive trade in this example. That's a fantastic trade. We're really, really happy with that. Now, if you go across the marketplace, you'll see that the Asian range gets swept all the time. But when it doesn't get rejected, we're not interested in getting into the trade. So there's no valid trade here. This one here, however, okay, we have that Asian range rejected. So we take a stop here. We go to the first liquidity target. That gets me my 2R. And you can do what you want there. You can full close your position. I would say if you're starting out trading, I would definitely full close my position there. You might actually be a more experienced trader. And if you are a more experienced trader, you might take, say, 80% of your trade out here and then hold the rest down to the Asian low. Asian low then gets swept. We have a rejection. This would have been a loss, but it's actually our first loss in this entire session, which is fantastic. Our first liquidity target would have been that high there. I'll mark that one on. Okay, this was our first liquidity target here, which I'll mark that one on. Okay, we wouldn't have got our first target. We would have come out and taken a loss in that position. So you may want to plan into the trading strategy some break-even rules. Maybe when you get past 1R, or maybe when you get past 2R, you then set your trade to break even so that you run less risk of the trade coming back to hit your stop. For me, I will typically just hold for my first position. I will then take the majority of my trade out at 2 or 3R, and from there, I'll then allow the position to kind of do its own thing. So just going back across the marketplace, you can see how this strategy is highly effective. You're looking for a sweep of Asia, you're looking for a rejection back into that Asia session, and then you're going to hold down to the first liquidity level. That doesn't get us our 2R, that first liquidity level, so we're going to hold down to the next one, which does give us our 2R. So that's a really important rule, because this should be able to get you into trades that win kind of 50% of the time. And if you're winning 50% of the time at 2R, well, the maths are in your favor. Again, I'll talk you through some of those. If you want to find out a little bit more about liquidity trading, please send me a message on Instagram at StrongMoneyForex. Cheers. Let's imagine that we've taken, say, 10 trades. Okay, so we've taken 10 trades. Out of those 10 trades, we've won 50% of them. 50%. Okay, that's 50% of the trades, which means we've had 5 wins and 5 losses. 5 wins, 5 losses. And the wins, all at 2R, for example. So let's use the lowest profit that we're aiming for. So we've got 2R, we've got 2R, we've got 2R, 2R, and then we've got 2R. Okay, so that's our 5 wins. And then we've got 5 losses, which is minus 1R, 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 1R. Okay, so we end up here with a total of plus 5R. Ooh. Okay, plus 5R. So over 10 trades with a 50% win rate, as long as we're aiming for 2R, then we've ended up with a total of 5R. Okay, let's say we take 10 trades over, say, the space of 2 weeks, 5R per trade, okay, which at 5% on our $100,000 account or £100,000 account, that's given us £5,000 or $5,000. Okay, so you can see how just with a small win rate of 50%, you are taking out consistent profits. And if you can do 5% every couple of weeks, then you can pass a prop firm once a month, which, again, the kind of the passing a prop firm in 3 days is glorified like this is an amazing thing, but as a professional and a long-term trader, it's not realistic. You want to be taking trades that you could replicate on scaled accounts, on $1 million accounts and things like that, and taking 2, 3, 4 potentially % out of the week is a fantastic win rate, and 50% at 2R regularly is fantastic. Now let's just say that you're aiming for the 3R target, okay? And this is where things get really exciting. So you're now aiming for a 3R target, okay? Which means you've made here 3, 6, 9, 12, 15R. You've lost 5R in your losses, okay? Which leaves you with 10R over that same 2-week period. Now our 10R gives us a whole 10%, which on a $100,000 account is giving us $10,000, and ultimately we are then passing our challenges possibly in a 2-week period. So your appetite's really, really important, and what you want to achieve out of the marketplace and how quickly you want to pass these prop firm challenges, if that's the option that you're going with. What's really, really important to understand though is that the 3R trades will be more difficult to hit regularly than 2R trades. So it might drop your win rate down to 40%. And if your win rate is down at 40%, you might then have one extra loss, 1R, okay, which means you have one less loss out of a selection of 10, which means now we're doing 3, 6, 9, 12, we've lost 6, so now you're on 6R. So you've got to find the balance, and this is where your testing will come through, because now you're making 6R out of the marketplace, which is 6%. It's still more profitable. It's still more profitable than our 2R strategy. But if that's at the sacrifice of winning less and therefore maybe affecting your psychology a little bit more, it's definitely worth testing and working out what can work quite well. So let's just talk through a couple of other bits. Let's just go through and look at these strategies. Now, One thing you want to just pay attention to is that if you have a really big push past, this wouldn't really be classed as an Asian sweep anymore. You'd have to have a really big stop here, which means you're not going to get to your first profit target here. So that would be a no trade. And that's really important to then factor in these profit targets. There's that even if you got down to the Asian low down here, you wouldn't have hit your 2R. So that would be a no trade for me. Going back down the marketplace, we've got this one here. So we've swept out Asia there. As you can see, that's the top of the Asian range. Let's use the same strategy. So we're going to take the stop from there, the entry from here when we closed back in. And then we're going to be looking at first profit target would be 2R. So we need to get down to this liquidity point here, okay, before... yeah, this liquidity point here before we're getting our 2R out, which we do in this example. Now, I promise you I'm going to talk you through some entries. I'm going to talk you through exactly how you should be getting into these trades. I'm going to talk you through each one that we've taken so far, and then we can go from there. So the first thing I think is really important to look at is the price action that the sweep itself provides us with. So what I want from a sweep is I want an impulsive move that leaves behind a form of imbalance. So when I'm looking at this section here, this is really messy look. You know, you haven't got any imbalances left behind. You've got lots of kind of congestion, consolidation here. So for me, that would now be a no trade. I wouldn't be taking that trade. This one here, however, okay, we've got the rejection, then a really nice imbalance here left behind. So that would be for me a really important one to get involved on. I'd be looking for a retest somewhere down here, and let's say you had caught, say, this rejection here. I place maybe my entry on this engulfing candle with a stop below the low. And then my first profit target, as we discussed earlier, is going to be 2R. So far, using this strategy is just using the most recent price action that we've had. We've made 2R out of the marketplace. Okay, let's keep that as a fixed text, and then we can anchor text and put that here. So we've made 2R so far. Okay, or what is that actually? 2.4. So 2.4R. Okay, so that's our first trade. Now let's go back to the previous day. So we had no trades on this day, as we know, okay, and then we look at this one here. So what do we get? So we're looking at price, okay, we're looking at price and how it responds to that Asian range. Okay, what do we get? We get a nice sweep up, then a pull back, then a retest. Within here, if you had the seconds chart, you would have found an imbalance because that big bold move here wasn't retested until the candle came back up. So we use the same strategy. We'll use an engulfing. We'd have to use the really low time frames on this one. Stop above that high. First profit target would be there, which I'll be taking. Let's just say, for argument's sake, let's take full position out because we can talk about other, profit-taking strategies in another video. So we've taken 2.4 out of that trade. So we're up so far, another 2.4. So that's another 2.4R. Let's get that saved, okay? Let's go to our previous day. And obviously, as we discussed, there's no entry on this because there was no rejection. Now, I want to see my rejection really, really clearly. I don't want to see just a little pullback and then price continuing on. I need to make sure that we've got some sort of bullish continuation. So in this example, push down, pull back, and then bearish continuation. This one, if you extend it out, we had a pull back, then a push down, then a pull back, then a push down. There was no continuation in the bullish direction, so I ignore that trade. Okay, this one here, there was no entry, as we know. Okay, this one here. So let's look at the price action. So here, within this section of price action here, we had a really clear rejection, okay, of this zone, which broke structure to the left, then a pull back, then a push down with some imbalance left behind. We've got a tiny little imbalance in there, look. Okay, so for me now, a retest and a rejection of that imbalance, I'm happy to get into that trade. So we've rejected that imbalance, stop above that high, first profit target at that Frankfurt low. So for me, I've taken 2.9 out of that marketplace. Okay, 2.9R. Okay, then we get the Asia low. So again, very similar. So a really clear rejection. We have an imbalance in there. Then we get a pull back. Then another push away with an imbalance left in there. So for me now, I'm waiting for some kind of structural change because This section here has created a liquidity void down here. We've got that little section of liquidity there. When that liquidity swept, we're waiting for a rejection. We take that from here, for example, stop below that low, because now we've got a clear idea that we're going to be rejecting. First profit target would actually be here on the 1 minute time frame. And so we've taken out our profits here at 3.1. Okay, 3.1. What's important to do when you're trading these Asian ranges is really important to make sure that you're waiting for clear confirmation that price is going to continue. And that may mean sometimes that you end up missing the trade. Sometimes you may not actually get into the trade. This might be an example here. So let's see what we get. Where are we? Let's see what we got on this one. So on the 3 minute chart here, we don't really have a very clear section of price, do we? Okay, we've got this kind of messy push up with an imbalance left behind. So I'm not going to be entering this just yet. Dropping down to the 1 minute time frame, I'm waiting for some sort of structure to come in to show me that we're going to go bearish. We've had that imbalance there, okay? So I'm going to be looking at that one now. We've had that imbalance there, and then we see that rejection of that imbalance with a retest. So again, stop above the high. We enter here, and then we take first profits off at that first profit target. And what's quite interesting is when we drop down to the 1 minute time frame and we get a more efficient stop entry and placement because of these kind of bearish moves. And what we're looking for is we're looking for that sweep, and then we're looking for a clear continuation. And ideally that continuation always needs to have an imbalance left behind because it shows us that there's momentum. From here, we've taken another 2.8 out of the marketplace. So far, we've not had any losing trades just using this strategy. So you can see just how powerful it can be. This Asian low, as you can see, price is just blown straight through, so we ignore that. Coming down here, this may be where we had our first loss. So I'd be slightly nervous because of how far we pushed out of it. But let's just use the strategy as it is, okay? We have a push up, push down with an imbalance left behind, which is that imbalance there. We've then had a retest of that imbalance, and then we started to reject. So we take an entry here with a stop above that high. First profit target down here would be 1.4. Next profit target 1.5. So we need to go for the Asian low. We don't unfortunately get 2R out of the marketplace, even if we took the Asian low. This target here is much easier to hit because it's closer and it's in the middle of the Asian range. This target here is harder for price to hit. It's harder to create the momentum to get this far back down. So that, for me, being my first target at 1.9 would mean no trade. Moving along. Okay, we've had the Asian range swept here. We've then had a nice push down here with an imbalance left behind, which we mark that on there. We've had a retest of the imbalance and then a rejection. If you'd got a tight entry, you might not have been very quick on this one. You place your stop here. First profit target for 2R would be not there because that's 1.6. We get 2R off here at that liquidity point. And then from there, we've taken 2.1. Okay. We then have Asian range swept from the low, so we mark that low on, and then we're looking for bullish structure, big bullish structure with lots of imbalances left behind, a pull back into that area with a rejection, so we take a stop here, entry here, stop here, first profit target doesn't get us our profit out, 1.5, so we need to hold for that top profit, that gives us 3.6, this would be a much higher risk trade, but as you can see, we take that profit out, we're up to 3.6R, I'm going to keep going until we get a loss. Okay, let's move on to the next one. Okay, so let's have a look here. So Asian range is swept. Now we're only back on the 13th of February here. Today is the 25th of February, so you can see just how powerful this strategy is. Sweep, imbalance left behind, mark on the imbalance. We then want a test and a rejection of that area. So test and rejection of that area. We take our entry here with first profit down here, second profit down here. That would be a 2.4 trade, which we take in like this. Okay, 2.4 trade, which we take in like this. We then have the Asian range swept. Okay, we have a rejection, imbalances left behind, retest, rejection. So we can take that entry here, stop below that low, then move up to first profit target would be 2R just off that high there. And then we've got another 2R in the bank. So look, you know, you've been watching me go through the charts, okay? I'm not manipulating any data. I'm showing you exactly what we'll be looking for in the trades, exactly how we'll be taking the setups, and you can see how powerful it is. Big push up, push down, imbalance is left behind, no retest unless you were here. You could have taken this little pullback here, your stop would have been massive, first profit target to Asia low would be 1.13, so that would be no trade. Okay, Asia then doesn't get swept, so we move on. Go back to the previous day, let's have a quick look here. So Asian range gets swept, big impulsive move down like this, imbalance is left behind. We then got a pullback and a rejection, which we enter in like this. Okay, let's just say stop above that high, you did a tight stop. The profit target would have been here. Actually, it would have been 1.7. Okay, so let's say we had a more conservative stop, 1.5. You wouldn't have taken that trade because ultimately the trade wouldn't have got you to 2R before the Asian low. I'm going to really try and get you a loss out of here, guys, just so you can see. But as you can see, same again, Asian high swept, a push down, an imbalance left behind, a pullback, retest, rejection, stop above the high, first profit target would be 2R there. We get that quite easily. We've got another 2R. Okay, we've then got Asian range down here. We're back to the 8th of February now. Okay, so we get a push up and a rejection away. Imbalance left behind. Okay, might get a loss out of this one. We then get a pullback and a rejection. So we put stop here, stop below that low. First target would be 2R or the Asian range. We don't get it, so that's a no trade. Okay, let's see about this one. Let's use this one as an example. So high here, push up, pull down, imbalance left behind. Okay, this is really far out of the Asian range, so I wouldn't really class this as a sweep anymore. But let's say we were aiming for that. Okay, stop below that first low of 2.79. We finally got a loss. So it's taken us 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 valid trades. Okay, with 1R as a loss. Okay, let's work out what that's done to our profit. So let me just grab up a calculator. So we've had 11 trades. Okay, we've won 10 of them. So we've had a 90% win rate on today's session, which is fantastic. I know in live market conditions and schedules and things like that, it's often unrealistic. So we've had 10 wins, which equals a 90% win rate, 1 loss, 10% losses. Okay, out of those wins, what have we had? So we've had 2.4, 2.4, 2.9, 3.1, 2.8, 2.1, 3.6, 2.4, 2, 2, minus 1. Okay, so 24% or 24.7% or 24.7R. Let's say we were using the same $100,000 account or £100,000 account. We've just made £24,700 or $24,700 just using a really simple entry. So I hope you enjoyed that video. Some really fantastic results here, as you can see, and I'm sure with your back testing you can hone and refine that potentially to make it even better. But look, use the Asian range. It's an incredible area to be swept, and if you get a clean entry with making sure that you get that really clear kind of rejection pattern from the high, so that's our high there with an imbalance left behind, you're looking for a retest of that imbalance, and then you're looking for a rejection with a stop above that high. First profit before the Asian low needs to make sure that it's 2R. That is just a fantastic setup, and it happens, as you can see, almost every day. 90% win rate, 24%, 24 grand made in the space of what, 7th of February, so we're looking at 20 odd days, 18 days, including weekends. That's a really incredible result. I hope you enjoyed that, guys. If you want to find out a little bit more about liquidity trading, please send me a message on Instagram at StrongMoneyForex. Cheers.